it's important to remind everybody that this is obviously not a one-off mechanism. You've got to show the revenue that there's a chain of this gifting each year rather than bespoke 1 year now and maybe 10 years later doing the same again. It's got to be a chain of annually making such gifts. Obviously the sums can vary depending on the income, but just showing an intention that this is a yearly exercise.
Welcome to Listen Without Prejudice, your exclusive gateway to one of London's leading law firms. In each episode, we dive deep into the stories, insights, and expertise that make Bishop Sewell a trusted name in the legal community. Join us as we explore everything from the latest legal trends and case studies to practical advice on residential and commercial property, corporate and commercial law, employment, family and divorce matters, private clients, and dispute resolution. Whether you're a legal professional, a client, or simply curious about the law, Listen Without Prejudice is here to inform, inspire, and engage. Now, without further ado, let's get the conversation started.
Hello, I'm Nicholas Barlow, head of the private client team at Bishop Sewell. I'm joined by Ben Williamson, senior associate in our team, and we're just following on from one of our other episodes about trusts and gifting generally and inheritance tax. I wanted to summarise normal expenditure out of income. Not the most exciting of topics, but can be very helpful and perhaps a good one to illustrate to our viewers. So, Ben, what is income and how can you give it away?
I think you're right. It's probably out of all the exemptions available, it's somewhat overlooked at times. I think we do see clients that are not necessarily aware of it and making use of it. So it is a good prompt to our clients to think about. Essentially, is what it says on a tin. If you're making X amount of year and after your annual expenditure, you have a surplus cash available, you can make use of that by gifting it to your family.
And does that only apply when you're working and earning money, or is this something that can continue beyond that?
No, absolutely not. It's any income.
Okay.
So whether that's from a pension, maybe property investments, or, as you say, annual salaries. Again, it's available from whatever the source of income is, and it must be income. It's important to establish that it isn't an income only.
So
no
cash.
Exactly, yes, yeah. But if you have surplus each month or year, whatever you work out, then you can, as you say, maximise this exemption to make some gifts to maybe your children or other family members.
So the point being that this then steps around the 7-year rule that normally applies for gifting for inheritance tax purposes.
Absolutely, yes. So it's because it's essentially, they look at it as though it's taxed at source. It's paid the tax is paid that year by way of income tax. This is surplus. You can gift it free of any inheritance tax concerns.
So effectively avoiding double taxation, as you've already suffered perhaps up to 45% income tax.
Exactly that, yes. Yeah, it's important to remind everybody that this is obviously not a one-off mechanism. You've got to show the revenue that there's a chain of this gifting each year rather than bespoke 1 year now and maybe 10 years later doing the same again. It's got to be a chain of annually making such gifts. Obviously the sums can vary depending on the income, but just showing an intention that this is a yearly exercise.
So perhaps a letter or some sort of communication would be helpful to, from bank of mum and dad or granny and grandpa saying they're intending to make these gifts.
Yes. I'm maybe overly cautious being a typical lawyer, but I think the more documentary evidence, the better. If you are using an accountant to do your annual self-assessment tax returns, I think that's rather useful because obviously they generally will provide you with a schedule showing the income. That's a great starting point.
I suppose there may be ISA income that would be on top of the that which is reported on your self-assessment return.
Yes, true. So maybe obviously expanding upon that and maybe having your own records there, whether it's a simple spreadsheet just to show what's coming in, the outgoings, and then having at the bottom there what the surplus is.
And so the trap here, it seems to me, is where you've got someone who's got lots of income, but they're then giving away another type of asset and believe the exemption applies. So perhaps just to reiterate the point you've made, so it's a regular cash gift with an intention to have that series of gifts to one or more people over time and not funding that by the sale of other assets.
No, exactly. Yes. Gifting a shareholding, for example, that's not going to work. This is, as you say, surplus cash.
Yeah. And we've got a few clients who've taken out bonds over the years and they're drawing down 5% a year and That's part of their income with a small I suppose, into their bank accounts. Can that be used for these sorts of gifts?
Unfortunately not. No, it's looking at this from the revenue's perspective, and they treat that as a capital disposal, that 5% drawdown, so they won't then allow you to claim this gift as surplus income on any surplus cash as a result of that.
And we've talked about the revenue. Is there a reporting process during your lifetime, or is this only after death? Does this information get handed over to the revenue?
As you say, this is upon death, and I suppose goes back to my point about healthy record keeping, because unfortunately it's your executors that are going to have to present this argument to HMRC and to show particularly that last 7 years that this was all surplus income and not disposals that are taxable. So again, healthy record keeping to be able to present and produce to your executors makes, rather bluntly, their life a lot easier.
And we've partnered recently with Zen Plans, who provide the facility to keep those sort of records, which certainly would make it very much easier for executors and family members rather than scrolling through 7 years worth of bank statements to find the information.
Yeah. The more help you can provide them with, they'll be eternally grateful.
Yeah. Obviously, we've talked about the cash gifts being made. How can that be used? Can it go into trust, or I've heard about it being used for life policies? What's the range of options available?
Exactly what you just said. All are applicable. You see clients again putting it into the trust. Again, the similar premise applies. This is still treated as a surplus gift out of income. More and more of our clients are becoming particularly interested in life policies as a way of reducing their inheritance, not reducing their inheritance tax liability, but funding the inheritance tax liability. And again, that surplus gift out of income and making use of any surplus cash to pay the annual premiums, or at least part of them, is a useful tool.
Perhaps on that point, but expanding a little bit further, who has the benefit of the life policy? Does that just go to your executors or to family members? How do you turn the policy into your tax payment?
With the right documentation. What you don't want is this lump sum forming part of your estate, because it essentially eradicates the point of putting the insurance in place in the first place, because it becomes a taxable asset for inheritance tax purposes. So making sure that the right structure's there, whether that be a nomination to a beneficiary or a number of beneficiaries, or again making use of a trust structure and what often referred to as like a pilot trust that can sit there to collect the funds to ensure that they're readily available to pay the inheritance tax bill when the time comes.
Presumably quite a straightforward process to obtain a policy subject to underwriting, the usual concerns, and then pay money away each year out of your surplus income to produce that tax-free sum of cash.
Exactly that. Yes. Yeah. We obviously work with brokers that specialise in such insurances, and they're there to offer financially regulated advice about this and to obtain you the right policy for you in your requirements and lump sum needs, really. So again, very much recommend seeking professional advice for this to make sure that the right policies are in place.
Yeah. And we can talk further about life policies, I think, on another broadcast, particularly when it comes to lifetime gifting of not income, but capital assets. It's a very useful tool to have.
Yeah, exactly. Yeah. A lot of benefit with them.
Yeah. So just summarise on the normal expenditure out of income, straightforward if you're keeping good records, regular gifts, and it can be used to fund trusts or just outright gifts to family members. Who wouldn't want to do it?
I suppose the simple answer is those that have surplus cash each year.
Yeah, exactly right.
You look at the particularly high net worth individuals, the maybe final salary pensions where they're sufficiently provided for in their retirement and not likely to need to divulge too much further into it. It's a nice tax planning tool which is reasonably straightforward and with very little risk.
And the alternative being that wealth just building up and being taxed at 40% otherwise.
Exactly, yes. This is more preventing capital building up rather than reducing the capital. Obviously, it's a surplus out of income each year, so you're not clearing the capital that's already established there, but you're just stopping it from building even further from cash that you bluntly don't need.
Well, thank you, Ben. It's been very helpful just to summarise that area and to say a lesser known exemption, but one that can be very, very helpful. So thank you for your time watching, and we'll be back with more.
That's all for today's episode of Listen Without Prejudice. Whether you're navigating a property transaction, a corporate, commercial, or family matter, we're here to guide you every step of the way. If you enjoyed the episode, don't forget to subscribe to stay up to date on future episodes, where we'll continue to explore the latest trends and challenges across our core practice areas. Do you have a question or topics you'd like us to cover? Or do you want to reach one of our experts? Feel free to get in touch via LinkedIn or through our website, bishopandsewell.co.uk. Thanks again for tuning in. Be sure to join us in our next episode, where the conversation continues. Until then, take care.